a brief summer break, welcome back to another edition of the Optimized Weekly Market Recap. I'm Matthew McGrath, and as always, for today's recap, we'll take a look at last week's activity in the markets as well as what we're watching for in the week ahead. It certainly was an exciting week last week with some very strong Canadian equity performance. The TSX was in fact the strongest performing North American index last week, up nearly 3%. Meanwhile, the S&P 500 and the Dow finished the week roughly flat, with the Nasdaq finishing the week down almost 40 basis points. Looking at sector performance, by far utilities and consumer discretionary were the stronger performing sectors, while technology and industrials were somewhat the laggards. Looking at the events from this past week, there was a ton of promising new data on the US economy, but on balance, it's looking like the third quarter is shaping up to be the strongest of the year. Real GDP is on track for nearly 4% quarter over quarter. That performance is driven by defiant consumer spending, which has always grown close to 4%. Turning to recent inflation data, the trend remains favorable, with the 3-month pace cooling to 2.4%, the slowest pace of growth since March 2021, which is obviously a very positive sign for the equity markets. Meanwhile, core inflation did come in a tick above expectations, and headline inflation was higher due to higher gas prices, but overall, the trend is certainly favorable and will likely play a factor in this week's interest rate announcement. In Canada, home sales dropped 4.1% from July to August, a second monthly contraction in a row on the back of very significant monetary tightening by the Bank of Canada. On the supply side, new listings increased 0.8% in August, and active listings increased by 1.9%. However, overall, cooling housing activity is certainly showing that the Bank of Canada's tightening policy has begun to take effect. For the week ahead, on Wednesday, all eyes will be on the Federal Reserve as it holds its 6th meeting of the year. The Fed is expected to leave the target for the Fed funds rate unchanged at 5.5%. However, more important than the decision itself will be the guidance that will be offered by policymakers for the remainder of the year, which of course we'll be watching very closely. In Canada, we'll get inflation data for the month of August. Expectations are for headline inflation to rise slightly on the back of higher oil prices, as well as strong retail sales data and a resilient housing market. And last, but certainly not least, we'll get a look at US jobs and housing data. Overall, a very exciting week in the markets last week and some very significant events for the week ahead. Until next time, thanks for watching and see you soon.